A very happy new year to you and welcome to Short View Trading in this our first video of 2022. What matters today and this week for traders? Well, despite Omicron, despite the fears of inflation and despite all the concerns out there, markets had a very good run in December. Indeed, as you can see in the chart in front of you now, yes, the global equity market across the course of the December was up 4.3%. The S&P 500 was up 4.4%. Whilst the Nasdaq 100 was one of the poorer performers, up a mere 1.1%, with Europe actually delivering some of the best gains amongst the major indices out there. Italy up 6.2%, the DAX up 4.7% in December, and Europe as a whole up 4.9%. But those strong gains hid a lot of volatility in the month of December. It was really quite a choppy month. And as you can see in the VIX chart in front of you now, there was a major spike in the VIX at the beginning of December and then another more reasonably chunky spike mid-December. But despite that, Santa did turn up mid-month in December as he typically does, with a strong rally in the last 2 weeks of the year, taking the S&P 500 and a few other equity indices up to record highs. Indeed, the S&P 500 hit a major high on the 28th of December and since then has largely consolidated those gains, as you can see in the chart in front of you now, tracking sideways over the last few trading sessions. So the key question is, where next in equity markets? Where's the next 1 to 2 week trade that we should be putting on to try and profit from moves in this market, whether long or short? And the first key port of call when thinking about that is really, what's the message of the short-term market timing models? And indeed, as you can see with the risk appetite scoring system that we're putting up in front of you now, it had a really juicy, helpful buy signal mid-December, but now it's moving towards its sell levels. And added to that, complacency is back. As you saw with the VIX chart we put up earlier, it's come down meaningfully from those highs in mid-December. But if you look at the steepness of the volatility curve, a much better measure of complacency in markets, it's really steepened up when you're looking at the 6 month forwards, less the short-dated 1 month or spot VIX. And as this chart shows, it's really back to signalling complacency and therefore starting to make you cautious about these equity markets going forwards on a 1 to 2 week basis. So the key question is how to play this market from here, particularly in the context of what we're trying to achieve, which is 1 to 2 week swing trades, either long or short, in equity indices. And as I say, the key first port of call is our models. There's more extensive models shown in our daily rag that's available for a free trial or to subscribers via the website. If you're interested in a free trial, simply click on the link below and put in your name and email address. We'll send you a free trial of the rag for 7 trading sessions with no credit card details required. But equally, as well as the models, there's also an update on our feel of the market and an explicit recommendation on an equity index on a 1 to 2 week basis. So what are we watching today and this week, the first week of the trading year? Well, there's a number of themes out there. Of course, being the first week, it's a lot of key US macro data coming out, culminating with non-farm payrolls at the back end of this week on Friday. Added to that, you've got ISM manufacturing today, and then non-manufacturing, the services ISM later this week, as well as ADP, jobless claims and so on. So plenty out of the States and indeed across the globe as well. We're waiting upon PMIs from the service sector, final readings for the month of December. They'll be out later this week, both in Europe, Asia and in the States. Added to it, there's some interesting information out of the Fed, including the minutes on Wednesday and a couple of Fed speakers, whilst over in Europe, all eyes on flash inflation out of the Eurozone and out of Germany at the back end of this week. So that's it from us. That's your morning market hit for Tuesday, 4th of January. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search for Short View Trading and click on the subscribe button, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well in 2022.